The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we found pressure in the soybean trade and in the wheat market on today, Tuesday. Corn relatively firm, and we found good strength in cattle and hog futures once again with a mixed session overall in the outside markets. A lot going on still. Let's talk about it. What is happening in this market trade? Joining us now here on Market Talk today, Jacob Burks with agmarket.net. Jacob, good to catch up with you, buddy. Thanks for joining us here on today's program. Hope you're doing well.
As always, Jesse, thanks for having me. I appreciate it.
Well, have you caught your breath from last week? I feel like there was a lot of major events that had market implications, and I would still say, even to some degree, we're still getting a little bit of the fallout here early this week. Tuesday's trade, pressure in the grains. I wonder if some of that's still tied to what we saw last week. I mean, just a busy week and a half, I would say, at this point in the markets, right, Jacob?
Yeah, you had this week kind of circled on the calendar for a long time of three major events that are will have an effect on their markets. You go into those weeks and you hope that that it's not the hype that you expected or that's been thrown at it, but actually it was. You saw the election that no matter what, there was a big change, right? We saw it change from one party to the next. Interest rate cuts were maybe not, but they did something. I mean, it wasn't like they just left everything alone. It wasn't one of these punt months. It was the fact that we're going to cut 25 basis points on the interest rates. Then all of a sudden you get into the USDA supply demand report, which is a very, very unlikeliness that we're going to see a major change to the yield numbers. It's the November report. People sleep through it, but that didn't happen. And all of a sudden we got a bushel and a half, or nearly a bushel and a half, knocked off the bean yield. So there was just a lot of things thrown at us last week. But it looks to me like as we go through and then look into this coming week here, that more of the change, more of the onus is put on the fact that what's going to happen in a couple of months whenever we do have the change of administration and things that are getting put in place right now. How is that affecting it? How is the rest of the world making their changes to what they're doing, based off of a new president coming in here in the United States?
Well, and we've wondered if some folks were maybe trying to front run the election and maybe still with export sales. That's been a big talk that we've really had the markets the last several weeks, Jacob. And I think maybe that's still continuing to some degree. You look at export inspections, for instance, things like that. You just wonder how much of this business is trying to get done before President Trump officially takes office again.
I think it's huge. I personally think that that's the big part of what's going on, whether it's Mexico. There's two things that we're talking Mexico, whether it's going to be, tariffs in general put on everything coming across the border. If it's going to be the non-GMO. And as we got closer to it, realized that maybe it's not the fear of the non-GMO coming through their political stance as much as it is trying to turn Russia in here and front run the elections and just get things that on the books, get it on now. And get it front run before we get into the major export season of our corn. And so I think when you look at China and what they're planning to import and their aggressiveness to get things ran through before the election, I think that was a big part of it. I mean, if that's not the case and we're really on that pace to sell these countries, that we're going to have to up the demand. We'll have to up that demand significantly. I hope that's what it is. I just don't really think so.
Well, and you look at the markets here early this week, we had Veterans Day trade with a holiday with federal offices more closed and not a lot of fundamental news to trade on. And we saw some pressure. And then you get in here Tuesday and you look at cheap world wheat values, some talk about palm oil, Indonesia, maybe slow walking, some things there. It just felt like here, at least as we start this week, we got plenty of factors that are kind of weighing here. There's not much in the way of bullish news, I guess I would say, for most of these grain markets, Jacob.
No, and when you get to relying on export news, okay, it makes our markets a little bit more volatile because that comes and goes really quickly. I mean, you're talking about building plants, and you're talking about grinding more, and you're talking about larger feed numbers coming in. All that stuff is pretty solid. That stuff doesn't change a whole heck of a lot. But when you're talking about the extra, I mean, exports are what's excess. And that's what we're going to get rid of and be selling. So those numbers, man, that can come and go really, really quickly. And so when Indonesia starts talking about, hey, they're going to mandate, from 35 to B35 to B45, and then all of a sudden it's like, no, we're actually not going to mandate Jan 1. We're going to make this a 6 month. Well, that took less of a supply fear of what the palm oil is. And then we saw that come down last night. It flew right into our soybean oil. And you see that weigh on the soybean market significantly today. So I think that, along with what California is making decisions of, hey, maybe we don't need to mandate this. And without mandates, the renewable industry, renewable fuel industry is going to just really struggle until we get something solid that said this is what we're going to do. And so it's really hard right now to bank on a rally from that without government intervention, to be honest.
I wonder too, all these events we're talking about, things that have been happening the last week and a half, but seasonally, this is about that time frame where we really turn our focus squarely on South American weather. How soon does this news cycle, in your opinion, finally run its course in these markets and we just focus squarely on South American weather?
We visited with Eric Snodgrass yesterday, and it was one of those things I tried to, point him down to say, hey, tell us there's going to be some problems in South America, and I just couldn't get him to do it. And I think that you look at the biggest fear we have right now is a slightly drier Argentine forecast, where you're trying to put some type of fear. But if you look at where Brazil's at, it's not. And so what kind of made me realize this is we started looking at the pace that Brazil planted these soybeans and how fast they went. And it kind of struck me as that they weren't planting, they were behind schedule because of the dryness. And so then during the rainy season, during their monsoon season, they were able to come in and get a lot planted fast. I was like, man, they're continuing to increase technology. We know that they've got more to plant this year, but also they got it done fast while it rained. And so there's some there, to me, that was the technology's there. You're starting to see more and more advancements there, and it kind of it even adds a little bit more fear to what they could produce. That boils back into when is this crop that we're seeing going to get harvested, and you get into that February-March timeframe. That's when a lot of people are making those final decisions of what to plant. And to me, that weighs directly here of what are we going to see next year when it's time to plant? What kind of people are starting to throw out some numbers of where we think the 2025 planting season and what that's going to look like. And to me, there's a lot of fear right now that without some type of major weather problem through the winter in South America, man, we're going to have a large amount of probably corn acres put in if their bean crop turns out to what it's going to what it looks like it could be.
And to echo with that, something too, we've seen a report here today that Farmers National Company is forecasting that the cost to put in a corn crop in 2025 is going to be lower in some areas for U.S. producers. So, with that in mind, and this is a question I've been wondering here as of late as well, Jacob, is like, have the markets been, have we been trying to buy some corn acres already heading into next year? What are you hearing from producers?
Well, first off, it's going to cost less. Things have to change. From what I've seen, there's going to be certain things that are more affordable. You're going to have to see a major change in some of your fertilizer, some of your land rents, stuff like that. And I just don't see that coming. I sure hope that that's what the case is when we get around to actually putting in the crop. I would say the most positive thing right now is the fact that the corn market, we took some production out of there. We have increased demand a little bit to the point where if the pace stays this course, we could see some exports even increased, maybe up to 2.5 billion bushels. That number has been thrown around inside our group. So we're not doom and gloom here. We do have some optimism with that corn market, but when you start talking about 92 to 95 million acres next year, that optimism goes away pretty quick.
Jacob Burks with agmarket.net's our guest analyst here today on the show. Let's talk a little risk management here. Let's maybe stick with the corn market first. I know we got a couple weeks yet, but we're going to start coming up on December options, and we're going to have to make a lot of decisions there. That December corn contract, I know, is a very heavily traded contract. So thinking about this now with a few weeks, with some strength in this corn market, what do you have for producers in terms of risk management on the corn side right now?
Well, I think one of the most confusing things to go back a little bit is what these spreads have done. We got a market that was falling the whole time, and we saw bull spreads working.
Sure.
I mean, today's the day that we saw the front months lose less than the back months. Again, bull spreads have worked. So that's been a very non-typical trade. Even when the market rallied a little bit here over the last couple of weeks, that was understandable. But before, when we were going down and saw the bull spreads, it was just a uniqueness. So, as you get through option expiration, which is not this Friday, but the following Friday, going into that first notice day, I truly feel like those spreads might normalize. So first of all, if I got guys, I'm still waiting and being patient right now. If I'm going to roll my futures hedges out, I'm going to be a little bit patient right now and see if I can't get back to that 15 to 18 type of number. Second thing I would look at is you can treat your options the same way. As that spread widens out, we're going to move our put options out a little bit further. I go out there and I look. We hit some major targets this last week when we had these rallies. The 44 level in March. We got a little bit more aggressive with making some of those sales, and a lot of it's built off of that USDA report. We saw a big, major, quick move. I would say that if you aren't making those sales and you have bushels in the bin, it's just very, very important with the type of production that we've seen in South America. Exports, if they slow down, if they come to a stop with the tariffs that are going to be added, to have some type of floor in here. The market's given us a little bit. I know they took a little bit away today, but the markets have given us. It's the time to reward that move that we've seen in the last 2 weeks.
All right, soybeans, thoughts there for risk management. And I'm just looking as well. Tuesday, Nove beans hung on and finished just above the 10 handle. I was worried we were going to close below it. But your thoughts of this soy trade? I mean, what should we be thinking about from a risk management standpoint right now?
Honestly, it's how you feel personally. As far as most people either have it at commercial bin sites or have their corn, they've stored their corn and not their beans. What I look like if you've been aggressive making sales right now, I don't know that I'm going to go out and spend a whole lot of money on re-ownership or anything like that right now, because what you're counting on is a problem in South America, and it just doesn't look that way right now. Okay, but if you do have beans in the bin, what I would look at is some type of aggressive selling strategy, and then looking at what we could do for calls in case this does move lower. But I would take away the larger portion of the downside move by being aggressive in the soybeans. But I would focus you on this. Go out and look at some short dated options. Look out there at something for next year, that 2025. We're still trading around 1030, 1040. We bounced around there. At one point today, we were at 1049. So have some orders in place and look in those short dated options to say, hey, if I'm going to plant beans next year, if that's in my rotation, I think I want to make sure at least I'm double digits.
Wheat, of course, a couple days in a row here of pressure, cheap world values. I mean, that's got to be a big thing here, I think, in the long term here. Your thoughts on this wheat market from a risk management standpoint? Anything we can do to navigate some of these soft prices right now?
Well, I wouldn't be as aggressive in the wheat right now. I think that we have come down. We've taken a lot out of it. Globally, we're still looking at some of the tighter supply demand, stocks to use ratios that we've ever seen. So it's one of those things that I'm not going to sit here and try to say that we're bottomed out, because we all have seen $3 wheat before, right? So I don't know that we have to be overly aggressive right now. With making any type of hedging recommendations. I think right now we could be a little bit more patient. You're getting a lot of conflicting information out of Russia as far as what do they really have. Are they counting the acres that they obtained from Ukraine, or are they at something that's they really had that much of a down production year? And if their production was that much down, hey, there's going to probably have to be some of that export business come to us in the future.
How about that cotton market too, real quick? I don't know how much you've been looking over there, but a couple days in a row of pretty hefty losses in the cotton market, Jacob.
Yeah, I mean, I think you look at cotton, we broke some major support. I mean, look at that from a technical perspective. The other thing that you have to focus your eyes on is what's China doing, and what kind of the tariff situation probably weighs on them just as in the cotton market, probably even more than soybeans at times. And I think that's the major fear right now. The few cotton producers that I do work with, we got very aggressive about a month ago, thinking into this presidential election, and I think that's going to serve us well. But as far as right now, what you're looking at, I think you have to continue with some aggressive strategies, and then maybe use calls to the top side.
Yeah, cotton D's getting down below 69 on the day on Tuesday. Let's talk livestock trade. We had a good day there, cattle and hog futures. Let's start with the cattle. We've been watching this market for quite some time now, Jacob, wondering, are we going to run out of steam? Are we going to run out of steam? What's cash doing? Where are we at? What's your feeling post-election here in the cattle trade?
And for a week we were right. Yeah, it's going to go lower, and then all of a sudden you find some strength, some resilience, and some support, and it's been awesome because I'm very nervous from the cattle perspective of seeing box beef hold up here. We see stock market rally again, so that you get all these conflicting things that we were talking about globally. We do continue to see strength from the economy. And I think that's what we've been talking about for a long time, as far as when does the producer give up and say, hey, I'm going to go to something else. I'm going to change protein, do something else. The alternative is just not there. Now you got hogs rallying on the cutout. Has been extremely strong there to keep that as the supplementary product costly as well. So I think with the cattle market finding support here today was honestly a little bit surprising, and a little bit hopeful. Box beef was down a little bit, I believe, at noon. And we've seen it come off the highs, recently. I'm just wondering when, we didn't establish a large cash trade last week. This week I'll be very curious to see what the cash does. I think if we start to see a pullback now in cash, that could flow into more to come, because eventually though there's going to be a long-term optimism. Like there's going to be some long-term positive trade. Especially if we start to back up on placements here the next couple of months, because the wheat crop is going to be more accessible. And then if you start to see some heifer retention on that could push us into some recovery. Now, that may be what we bounced a little bit on here this week as we got some good rains across the winter wheat belt.
What about feeding margins for the cattle folks? I mean, any thoughts there? I think a lot of folks maybe already took advantage of locking in some feed needs when grains were a little bit cheaper here, but maybe still an opportunity. I mean, what's your thoughts there?
Yeah, I haven't run the numbers exactly. I know if you come in here and you look at the pure cattle crush, you're struggling. I mean, you're still betting on the come that we're going to see some better prices. But I do feel like, by using some of this opportunity, if you will, by the corn market coming down $4, I mean, it does make it a little more pleasant. I would have to say though, feeder cattle, we've seen cattle rally without feeder cattle leading the way. And so I think that's probably been the most optimistic thing for the cattle feeder, is that they've probably gotten quite a bit of these feeder cattle hedged or locked in and looking for some bump ins in that cash, live cattle trade. But as far as those numbers go, it is more optimistic with seeing this grain and the soybean meal especially come off. I mean, I think that's one of the things that you're seeing a lot of these rations kind of change from into a gluten and corn based to even feeding some of that protein through soybean meal as that's really fallen off.
Absolutely. Hogs too, real quick, just to lean in there. I mean, we've seen great strength. Demand has been solid here. Are we hitting the top end of the range? I think that's the big question I'm wondering now in this hog trade, Jacob.
Well, I think with John Calipari as their coach, I think they have a lot of upside. Oh, you mean the live lean hogs?
I'm not talking Arkansas Razorback basketball here, but
okay, I'm sorry. Let me get back to business here. But yes, I do think that the lean hogs. I mean, just watching this cutout, I'm always fearful whenever you start looking at pork bellies as the direction in the cutout. I mean, so you start seeing we were $20 above the average, the 5-day average, and now all of a sudden we're $20 below it. So like you're seeing a lot of volatility in that cutout. I think that's the one thing I would watch. The one thing I'm fearful of is we saw a large position from the funds. We've seen the record. I think we're 115,000 contracts long in the lean hogs. That's just a large amount of contracts in the hogs that at some point will diminish, will go away. The one thing is we're in the last days of the gold Monroe. Okay, so we have moved a lot of these out to some of these deferred months, and now this December contract's still going. So I would be careful to think that since that cutout's above 90 and we're still at 82, we're still at a discount. So I don't know that this December contract is done.
Good thoughts as we close it out today. Anything final you want to mention or reiterate to folks?
I think that we did cover a lot, and there's a lot of confusion going on, and there's a lot of balancing. Okay, there's a lot of balancing through global economies of what's going on domestically here in the United States, and you're seeing that in the gold. You're seeing that in Bitcoin going up to 88,000 or whatever. You're seeing, the bond market fall off. I think that through volatility gives you opportunity. So from a producer standpoint that does have production left to sell, have orders in. You're not going to get filled if you don't have an order in. So be aggressive there. Put some numbers in there out there that make sense, and then look at using some options to protect what you don't have and what you don't want to get rid of yet.
Jacob, if folks have questions, they want to reach out to you guys there at agmarket.net. You guys have a lot of resources, I know. What's the best way to reach out?
Hey, just agmarket.net. Take a look at us there, and would love to give you our 30-day free trial of our intel. You learn a lot about us, and we'd love to chat if you have questions.
And you can also sign up for their upcoming conference early in the year in Nashville. All the details, agmarket.net. Jacob Burks, thanks for joining us here on Market Talk today. Always appreciate it.
All right, buddy. Thanks for having me. Appreciate it.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.